Welcome to Nothing Ventured with me, Aarish Shah. This is the podcast where we explore the people and stories that make up the tech and venture ecosystem. Don't forget to subscribe, like, rate, and share the podcast because it really helps us get the word out to more people who are curious about understanding even more about the world of venture capital. This season of Nothing Ventured is sponsored by Odin. Odin helps angels, VCs, and founders to raise and deploy capital seamlessly. You can structure your SPVs and now run your funds, handle capital calls, portfolio management more smoothly and easily in one place. Founders use Odin to raise their entire round in a few clicks by simply sending investors a link and receiving investments immediately. Odin works with over 5,000 investors and over 150 emerging fund managers and angel syndicates globally. Head to joinodin.com to learn more. That's joinodin.com. Hello and welcome to another episode of Nothing Ventured with me, Aarish Shah. Today in the studio with me, I had Antonio Avitabile. Antonio has spent over 20 years with Sony with a large focus on image sensors, given his background in electrical engineering. He is now managing director for Sony Ventures Corporation in Europe, the venture arm of Sony investing in deep tech, digital health, fintech, and new materials and products in image sensors, graphene, and quantum. In today's episode, we talked about getting buy-in from proud engineers, moving from investing off balance sheet to a traditional fund, why in deep tech you have both the technology risk and the market risk, even though revenue can come suddenly, why Europe lacks great commercial founders, and coping with failure, as well as investing in Africa and building an educational pipeline for talent for the future. Let's get into it. Hello and welcome to another episode of Nothing Ventured with me, Aarish Shah. Today in the studio with me, I have Antonio Avitabile. If you want to learn more about Antonio's background, please do check out our primer episode. But for the meantime, Antonio, great to have you here in the studio. Looking forward to getting into some detail with you.
Thank you, Aarish, for inviting me again.
No problem at all. As a fellow Florentine, well, not quite Florentine, Tuscan, like it's great to have someone representing Italy finally in the studio.
Thank you.
Let's talk about Sony, right? So Sony first got into investing directly from the main balance sheet before formalizing a fund, as we discussed in the primer, via the Sony Innovation Fund, and then a more traditional GP LP structure at Sony Ventures Corporation. So can you talk me through what drove that shift and how the approach to investment changed from, say, one to the other, from off-balance sheet to the Innovation Fund to then now the more traditional GP LP fund?
So the main kind of driving force there was speed, really, and make it a bit more formal, because when you do off-balance sheet investments, you need a sponsorship and you need to build a case, and it usually takes long time because you need to kind of it's not enough to kind of just speak with the top guys in Japan. You need to have a bottom-up approach. Mm-hmm. Also because Sony is a very engineering-driven company, so you need to convince the engineers.
You need to get buy-in.
You need to get the buy-in, and which is really complicated, because especially if the company has a very strong engineering culture, those engineers they are very proud, and sometimes they don't admit outside there is a technology probably better than the technology that they developed, and so it was really complicated. And at the end, the idea was, well, a good idea can come from everywhere. Yeah, you need to be to kind of be humble enough to realize that, and we were missing opportunities. Yeah, by spending so much time building internal consensus, and so the decision was made in 2016 to formalize this process and make it a fund with an investment committee. So that we can, invest and then after investment, kind of build the partnership with the business unit, and we have actually in the last 7 years we are quite proud to say that about 30 to 40% of the companies in the portfolio, they have a relationship with the business units inside Sony Group. So
and presumably, I mean, whilst there is a goal of Sony potentially being a customer or a user of the products in which you guys are investing, presumably it isn't like a traditional CVC where that is the only goal, right? Like the only goal is there a technology out there that we can acquire or invest in to look at potentially acquiring down the track to further our own internal goals, versus, again, in a traditional fund structure, you are returning capital to LPs, therefore you need to have those sort of outcomes, right?
Absolutely. And that's why I think I usually I don't like to invest in companies that are directly in the trajectory of a Sony group. Yeah. Because then, also because I'm, especially for semiconductor, I'm also in charge of the M&A part. Okay. So with the left hand I invest, and with the right I have to buy. So I'm in the middle of, so we like to kind of invest in stuff that is kind of adjacent to the trajectory. Yeah. A bit like ecosystem building type. So image sensors, I like to invest in let's say in stuff that in actuator companies or in lens companies that are complementary. And are pushing my core business. So because in this way you do, there is a strategic angle to it, and you understand where you invest in what you invest in, but you also can maximize the return on investment in this way. So
I mean, so just as a tangent, right? Like there's been, I think over the last year or so, there's been definitely a return to quality within the investment landscape. I mean, a lot of VCs would argue that they've always been investing in quality. I think that's been debatable, seeing some of the stuff that that there's been invested in. Obviously, we've just seen WeWork collapse, or is likely to go into Chapter 11 bankruptcy protection imminently. But talk me through what it is that you mean when you talk about deep tech, because again, there are some that talk about deep tech when they're talking about AI, some talking about deep tech when it's purely around hardware. Then there's some that's maybe hybrid. How do you look at sort of deep tech as a category?
For me, deep tech, it's in deep tech investments you have both the technology risk and the market risk, and typically the kind of the revenue comes suddenly. So you need to invest a lot of fixed costs in advance, and wait few years before getting some kind of real revenue, meaningful revenues. I'm not talking about NRE projects. I'm talking about revenues out of a product. So it's a bit like biotech in a way. So there is a lot of initial capital and fixed costs that you need to put there, and bet on revenues coming in 2-3 years from now. And once they come, they come big. So it's like a blockbuster equivalent on a biotech. So that's for me. It's for me deep tech. Now, why deep tech is interesting for me? Number one, because my background is coming from there. So I'm kind of I like to invest in stuff that I understand. But also I think today it's very relevant deep tech investing because there is a need to invest in stuff that delivers real innovation. I think so. For people, we talked about medtech, for example, but also climate change. Climate change is real. So investing in stuff that actually can help the environment, also for me that's deep tech.
Yes.
Of course, it's capital intensive, but if you want to build big business, billion-dollar businesses, they are, you need to invest a lot of money in advance, and it takes 10 years to build a billion-dollar business. It's not like 2-3 years journey. So.
And I think that's probably that main difference is the difference. Like, so software businesses tend to be relatively quick and relatively capital light to get off the ground, right? And you can get to early revenue relatively quickly and then iterate from there. With deep tech, you can't build a half-baked medical device, right? Like the medical device has to be absolutely perfect by the time it gets to market, has to have gone through all the various testing phases, all the clinical trials, etc., etc. And that's why that capital intensive nature that you're talking about is, you know, it's that upfront investment in the R&D as opposed to getting to revenue. So what you're taking a bet on is the IP rather than the market initially. At the
Exactly,
least, right?
exactly. Said that, you know, it's a kind of a double risk there because you know, you need to build the IP and then you have the market risk. I've seen a lot of great engineering teams that can actually build amazing IP and amazing technologies, but then they don't know how to, you know, the go-to-market is the problem. So the go-to-market, and by the way, that's you know, typical of Europe. And by the way, because in Europe, typically you find founders that are amazing scientists, great PhDs, but you know, the commercialization, the product market fit, and you know, it's really difficult. And you typically don't find this type of founders profile in Europe. Why? Because in Europe we don't have the Google, the Apple, you know. You have great academia, you have great universities, and kind of finding those people here, it's really complicated.
Well, let's talk about that a little bit, right? So you invest globally at Sony, but you're specifically based in Florence, in Italy. And it's always struck me that despite a huge amount of potential in Italy, the tech and venture ecosystem is nowhere near as mature as it is here in the UK, say, or France or Germany for that matter. So, you know, you touched on it there in terms of, you know, you have great academia, but you don't have that commercial spirit in Europe generally. But what do you think the reasons behind that lag in Italy specifically are? And do you think things are changing? Because I am starting to see now pockets of innovation happening throughout the country.
Yes, I think, well, things are better than a few years ago in Italy. A lot of, mainly because there was a lot of money allocated from CDP. CDP is actually investing in several funds, so there are some new venture funds coming up and investing in the ecosystem. So the cash element, or the kind of, especially for early stage, I think it's there, which wasn't there before. So that's a positive move. Now, said that, in Italy, in my view, there is one issue related to, which is kind of European issue, which is what we discussed before about this academic pedigree, because you don't have, you know, you need to have big companies in the ecosystem, because out of those big companies, you know, you get product managers, you get business development guys. They know how to connect the technology to the market. So that aspect, I think, is missing in Italy. In Italy, we have ST Microelectronics, and we have some, you know, of course, some other pharma companies and so on. But it's not a big, you know, it's not US or it's not UK. So I think that's one element that is missing there, and then there is culture as well. So one of the key. You know, one of the key aspects of venture capital, and it's you know, how do you cope with failure?
Yeah, I was gonna say,
how do you cope with failure? So because failing, it's actually something that you know, it's inevitable to learn. And I think in Italy there is this kind of you know, bad let's say this reputational issue around, okay, I tried, I failed, and the company went bankrupt, and I think that coping with failure is super important. So being able to kind of, you know, try again and stand up and try again and again, I think that type of attitude is a cultural trait that we don't have as Italians. And for example, in Israel, you know, I can see, you know, I've done several investments in Israel. I can see a completely different type of attitude. And then there is another element, which is the big economy, let's say, fallacy in my view. So because once you start a company in Italy, you have an economy that is pretty big. So you have 60 million people. So you know, you start to sell locally, and then you know, and then usually, you know, the company is sold, but it's sold for small money. So it's a quick sell. Why? Because you cannot really expand and scale to a big company. So the idea of, for me, venture capital is also the engine to build a bigger economy, and the big companies, a Google type of companies in Europe, in Italy. Why we don't have? Because there is this kind of big economy type of fallacy. In Israel, they know that it's a small country, so they start from day one to go to US,
the US,
to the US market. Yeah. And that's how you make actually big companies, the scale up, and also you make bigger bigger multiples in the exit. Yeah.
I think there are three things that probably pick up on there. So one, the issue around failure is definitely not isolated to Italy. I think we have the same, we have similar mentality here in the UK, I would say as well. Even today, when you look at some of the press around, say, the Future Fund, which invested in businesses during the pandemic, and we've had, I think, 8% failure rate so far, which is nothing, right? It is actually probably the sign that that Future Fund is working exactly as how it should have done, right? Because all you need is one or two or three big exits from companies that took cash from that to succeed. But the press obviously reports it all as very negative. And in the US, on the other hand, you don't have that stigma around failure. I think failure is actually worn as a badge of honor, right? You've tried, you tried to do something, it didn't work. Okay, great. You pick yourself up, you move on. WeWork is another great example. I mean, Andrew Newman, for all his other failures or failings, raised $350 million from Andreessen Horowitz last year, despite the fact that WeWork is done. And one would hope that he has learned a lot from his journey building WeWork, right? I think the second issue, this big market fallacy, exactly as you say, there are almost two sides to that. One is that we don't have sufficient funds and funding mechanisms here in Europe at those later stages to really take those businesses into those larger categories. And therefore they have to look at the US, right? Like that's where the capital is. We've had plenty of people on the podcast discussing the problems with the IPO markets here in Europe as well, where again, we don't seem to treat technology with the same enthusiasm maybe as our US counterparts do. And that leads to one of two things. Either businesses look for smaller exits here, either trade sales or whatever it might be, or they move to the US and obviously fulfill those sort of ambitions there. And that means that capital and those returns end up in a large part in the US as opposed to Europe, right? Yeah.
That's exactly that.
Yeah. This season of Nothing Ventured is proudly sponsored by Emerge One. Emerge One provides fractional CFO support to venture-backed tech startups and scale-ups. They work with businesses from C to Series B that have been backed by some of the UK, US, and Europe's best venture capital funds. They provide support from capital allocation and management, KPIs and reporting, fundraising support, financial modeling, investor relations, and investor management. Come check them out at emergeone.co.uk when you're scaling fast and have need of a CFO. So, you're passionate, we're going to switch back to kind of deep tech a bit, but you're passionate about deep tech, having spent a lot of time in the image sensor space, and you set up design centers in Oslo and Trento. So can you describe a bit further, when you talk about investing in deep tech, what makes it so difficult? We talked about obviously the capital structure, the market stuff and so on, but also why is the upside potential so much higher as well in deep tech?
Well, because I think there is an element of higher risk embedded in a deep tech company. Because as I said, there is the technology development risk, but also the market risk, and usually, and of course there is a correlation between the reward and the risk, so I think that the upside potential is coming also from the kind of the fact that some of the kind of deep tech technologies there is a real pain point that you are addressing. So it's not a gradual incremental type of innovation, but it's a leap.
It's a one big hit.
It's a one big hit, and that's why there is this kind of a big differential in returns. But of course, there are two elements there. You need much more time, and so you need patient capital for that. and also a larger amount of capital.
Your point around kind of those founders, or that lack of kind of commercial founders in Europe, maybe generally, or Italy more specifically, how does one overcome that? Like how do we start building an ecosystem where we have those generationally, incrementally better founders? I mean, obviously, to your point, if there aren't big businesses here, you don't have graduates from those businesses, either in product or tech or commercial or finance or whatever, that understand how to build truly great businesses. Is there a quick fix to that, or is that just something that will only come over time?
Yeah, I mean, there's no quick fix to that, because I think convincing a Japanese company to kind of start a manufacturing site or a big site in Italy or in Europe is not that easy. We managed to get Trento and Oslo. Why? Because there is a strong business case there. I mean, in the case of Trento, I was looking for a site that was done in just during during COVID, and that time there was an issue of the best engineer. There was so much competition in getting talents, so I was looking for a site where it was there was not much competition. So I took a top guy from the competitor, and I brought him in Trento. In Trento, it's nothing. It's only Sony at the moment. So there was no risk for a competitor to take my people. I think the convincing companies to invest in American companies to invest in Europe and Japanese is not easy. And I think that those investments, they are directly connected to the market opportunities. So if you think about what are the markets that are left in Europe, we had cellular and now it's completely gone.
All Southeast Asia.
So we have now telecommunication. We have the Ericsson and Nokia of the world that are still very strong for telecom, especially now with the current geopolitical situation. I think they have a good position. Then we have a bit of industrial in Germany, automotive. So I think the problem is bigger than just venture capital. So I think Europe needs to really find we need to kind of find some new niche or a new market where Europe can actually excel, and that would attract actually the interest of big organizations to invest in Europe.
A new competitive advantage almost, right?
But
I mean, I guess one of the points that's related to that, and again, just digressing for a second, we just had the AI Safety Summit here in the UK.
Yes.
Obviously, Europe is seen as being quite heavy-handed with regulation. Do you think that the regulatory environment plays a part in that as well?
Absolutely. So again, I think regulation and innovation, they don't get along. So I think I'm not saying that you don't have to have regulations. I think regulation is super important, but I think it cannot be the only regulation. I mean, you need to sometime, especially at the beginning, I think regulation needs to be relaxed.
Then you need a sandbox almost.
Exactly, and then when things are up and running, then you need to kind of go there and regulate. But at least in the first phase, I think it's really important to unleash creativity and make sure that people do their magic. I think that's one of the issues that I think needs to be addressed, in my view, in Europe too.
Yeah, for sure. And I think again, the problem with over-regulation is you stifle, as you say, innovation, but you equally just you stifle innovation that is already happening, but you also stop people from innovating further, right? Like people then look at Europe and say, well, it's going to be too hard to launch XYZ type of business here. I'm going to go to the US, or I'm going to go to, I don't know, argument's sake, India, where maybe there's less of a regulatory environment and we can do things there. But I think Europe has very much set its stall out as being the continent that regulates. So I'm not sure how easy it'll be to convince Ursula and her cohort to change their tack. Let's talk about sort of the geographical spread of Sony, right? So the Sony Ventures team. So it's based across Japan, Europe, India, the US, and Israel. Where do you see the next frontier region And I know that you have recently launched a program for Africa. So yeah, I'd love to hear about that as well.
Yes. So okay, the next frontier region. Well, I of course I'm based in Europe, and I'm for me. There is a big opportunity in Europe because of so many talents, and I think that we can actually bring that commercial dimension that is required to complement. Also, the big opportunity in Europe, especially in deep tech today, is what we call the PPP, so the public-private partnerships, because you have a lot of non-dilutive financing coming from governments. Which we love, because it's leveraging the equity, and so that's the one big opportunity that I see in Europe today. And then the other opportunity that I personally care about is this Africa activity, and there we actually about it was 8 months ago, I was approached to do something in Africa, and my first reaction was, well, we know how to deploy capital, but Africa is a completely different region, and we know nothing about Africa. So I approached the World Bank, the private arm of the World Bank, IFC, and actually we started a kind of a dialogue with them, and actually we. Just a few weeks ago, we announced that we press released the partnership with them. So we allocated some funds, 10 million from our side, and there's a matching from IFC side, with the idea to actually invest in African companies in areas related to entertainment. Yeah.
Massive markets in Nigeria and
exactly,
and South Africa. And so on,
exactly. So we are looking at three regions: Nigeria, Kenya, and South Africa. But also Ivory Coast. I mean, we have defined those regions, but we don't have really some kind of.
Well, they're the typical hubs, and then from there you can spider out.
Exactly. It's sub-Saharan Africa, so not North Africa, but we are looking at those three economies primarily. And we the reason the key philosophy there is again profit with a purpose. So the idea is to kind of really harvest creativity. African creativity and the best IP and help them to kind of reach the mainstream. So, for example, the Afrobeats is one example in music. But also, I was in Lagos actually a month ago. I met some amazing animation companies, making a 3D animation.
Wow.
And again, the idea is to kind of take that IP and bring it to the mainstream, leveraging the Sony entertainment groups. And I have to say, in 23 years inside Sony, I've never seen so much enthusiasm across the board. Everyone wants to do something, wants to be involved, wants to help. And as a side project of this, we want to actually also build a school. And the idea is because what we have seen is that you invest in companies, but then, as you know, you need people, talented people, to work in those companies. And the idea is, with one end we invest, with the other end we actually coach people, bring them knowledge up, and then we place them in the companies that we invest in. So we actually generate employment as well. So that's basically a little bit the philosophy and the spirit of this. And we are in the process of hiring a couple of people, actually, one located in Lagos, the other one in Nairobi.
Okay.
So we're trying to.
Amazing. I mean, there's so much I could talk about, and a couple of things I'll definitely take offline with you. But actually, interestingly, I just got back from some meetings in Abu Dhabi, and one of the presentations was by an entrepreneurial family that we know, that my family knows, and they created the Maji project, which is basically a water project. So they are trying to get 1 million people clean water in Africa within the next, I think, 3 or 4 years. And I think they're already at sort of 300,000 people touched. And what's incredible to me is that actually what they've built is a very innovative solution that solves for the problem of, typically you have hand pumps that break down and, are never maintained, and therefore you have people traveling 1 hour to get clean water, not even clean water, to get water. And what they've managed to build is a flat pack system that can be installed at these deprecated hand pump sites, so that you don't have to lay the concrete, you don't have to drill the borehole, you can just set it up with a tokenized system that allows people to draw water, and they have community buy-in and so on and so forth. But what struck me is that it's a charitable project, right? Like, it's actually massively innovative, has the potential to impact many people. One of the statistics I think he said is, there are 800,000 people worldwide without access to clean water, and something like 2 billion without regular access to water. So the one of the things in Africa especially is this issue that often Africa has been treated as a charity case, and the innovation that comes out is dealt with by foundations, Bill Gates and so on as well. But actually, if you funded the innovation, you would self-perpetuate some of the solutions as well. And I think that's one of the really incredible opportunities.
Absolutely. The motto is to unleash Africa creativity to the world. So to tell the untold stories of Africa. We have seen amazing IP there. There is great potential, and I think there is a lot of misinformation. About again, I went there a few times, and there's a lot of stuff there, a lot of talents, a lot of innovation, and it's just the beginning. The market is very young, and we are going to put small money to work, but I think this is going to be, it's a very interesting project, and we are going to grow it. So,
and small money in Africa is big money in Africa at the end of the day.
Absolutely.
So you get a lot more sort of bang for your buck. So just to kind of round off, similarly over the last couple of years, as the VC ecosystem has been resetting, we've seen an upsurge in the number of truly innovative businesses. We've talked about the deep tech side of things, and they're being launched and backed. Obviously in the AI space, in the material sciences, hardware sectors. So what advice would you give to founders that are building in the kind of deep tech space today?
Yeah, so I think one of the key, first of all, I think in time of crisis or in downturns, that's where the big companies are built. So one key advice is that if you really have conviction on an idea and you really have I think you should go for it, because there will be never a better time to found a company, in my view. I think good companies and good ideas are actually financed. So I think because many people say, well, it's very difficult to raise capital right now. Yeah, it's difficult if depends. We are closing an investment now that is oversubscribed. So I think good ideas and good companies they actually find capital. So my suggestion is actually this is the time to start. Of course, in deep tech space, what I would look at is always especially right now, look at public money as well. Because there is public money.
There's a lot of grant funding.
There is a lot of public money. So I met some companies, for example, in Scandinavia, deep tech company in Sweden. And I suggested them, why don't you actually set up a subsidiary, in Europe? Because there is a lot of CHIPS Act and so on. There's a lot of funds. So I think those type of things I think are required. So you need to kind of be careful in order to get the public money, where the legal entities is very important. So I think that. Looking at those things, I think it's important. I think that there is a good momentum around deep tech right now in Europe, and there is capital for good stuff. So I would, I'm positive. Of course, the economy is what it is, and the world is what it is. But I'm optimistic. I think it's a little bit. In the nature of my job to be optimistic. So
100%, and not only that, but I mean, as you said, deep tech takes longer, right? So you may launch it during a downturn, but you may be taking it to market in the biggest upswing, right?
Absolutely. So the idea is to start something today and look at reaching, let's say, a market leadership in 7 to 10 years from now.
Yeah.
And we hope that in 7 to 10 years from now we are gonna have an upcycle.
And not only that, I think if you build during a downturn, you're almost forced to be more capital efficient.
Yeah.
And if you're more capital efficient, when those upcycles come, you reap the benefits, right? So A, you have less dilution, but B, you have a cost base that is manageable rather than bloated, and therefore are able to grow much faster with much more efficiency than I would argue a lot of the businesses that have been funded over the last, let's say, 5 years.
Absolutely.
Plus minus would have been where you're seeing obviously today we're seeing lots of headcount cuts and cost reduction, etc., where they've scaled too fast too quickly because they had too much capital trying to fuel them, but not enough market to actually take advantage of. Right?
Absolutely. And then in addition to that, it's much easier to find talents because there's the job market now. I mean, you find a lot of people. Yeah. So I mean, in 2019, 2020, that was the challenge. Yeah, the challenge was to get the right talents. You had to pay a lot of money.
Right, it was engineers going for $500,000 salaries. Right?
Exactly. So I think that's a good time to start a company. Yeah, it's my.
Amazing. Antonio, thank you so much for joining me today.
Yeah.
For our audience, where's the best place for them to find you online? You're on LinkedIn, Twitter, where
actually LinkedIn is my
Amazing.
Yeah.
We will obviously drop that in the show notes. For the time being, thank you so much for joining me.
Thank you so much. Yeah.